All right, let's do a sound check, everybody. Make sure the audio is working good tonight. How does everything look? Sound, camera,
All right, let's
everything?
do a sound check, everybody. Make sure the
let's wait. There's a 6-second delay from my stream till YouTube. That's always gonna get me. So Rips, I sound amazing. Thank you. Rips is in the house. So you sipping some sleepy time tea tonight? We'll give everybody a few minutes. I like to make sure we have just a few minutes to let everybody join. Also, I have a watermark for my chart here. Let me see if I could get that in here maybe, so everyone can see what I'm trading and what chart I have. As I get this set up, might as well do the intro, right? I'm Coach DBA, Coach Dakota. Welcome to Slow Markets. It's day number 4 unofficially, day number 2 officially, and it's just going to be me tonight. I have Coach Jay, who's going to be joining me on Thursday. We're going to be analyzing the live markets, and so anything that I say is primarily advice, right? Primarily not advice for educational purposes only. Here in the YouTube description, there is the risk disclosure, but just for the heck of it, I'm going to go ahead and copy and paste the link here. Let's go ahead and do that on YouTube. Copy and paste. There is our risk disclosure on YouTube. And let me see if I could get this watermark up here so you guys could see what market I'm looking at. Let's see if this works. Can you guys see that watermark on my screen? Ooh, that's pretty big. Let's go ahead and lower that just a little bit. Starting off with this. Looks good. Thank you, Danielle. We have Danielle with me. She sent me a Slack message right before class, and she's like, we have a tornado warning, and I'm just like, well, you could join us. It sounds like the tornado warning has been lifted from wherever you're at. So always worried about everybody here at Topstep, making sure that everyone's safe and sound. So let's dive into it. Like I said, this is Slow Markets. I'm Coach Dakota, and we're going to be doing these live market analysis. I'm in my live account. Today was an interesting day for trading. I ended up plus $196. So I didn't get the $200 mark that we all go for in order to have a winning day. So I just had a 196. That was frustrating. Always need to make sure we're taking into consideration all aspects, because it's one where my P&L showed 220, but after commissions it was 196. $196, not thousand. So here's the Nasdaq. And if you guys could remember on any of my previous classes, I start on a higher time frame. And the reason being is that we only get one new candlestick every single night, right? And when we analyze the market, I like to get a bigger picture point of view. Then I'll zoom down to an hourly, and then finally a 5-minute. So essentially, it was another boring day in the markets. It was a boring day for the Nasdaq, and we'll go over the other markets like Crude, Nikkei, and Nasdaq, Crude, and Nikkei. Those are the 3 main markets that I'm going to be covering. It is the afternoon. Like I said, it's prime time. If you guys have any questions for me, please type them in the chat. If they're going to be very related to what I'm talking about now. If they're not, then save them till the end of class. I will hold kind of a Q&A the last 5 or 10 minutes, and we'll just be answer back and forth, right? Because I'm here for you guys. I'm here to answer questions. I am here to help analyze the markets and hopefully give a new perspective on how to trade here at Topstep, or how to trade in your personal accounts, or just trading in general, right? So I'm analyzing. I start my my analytics on a daily chart. My analyst on a daily chart. So primarily, what I'm trading is, and my strategy, I guess, is very basic technical analysis. And I was thinking about that all last night and throughout today. Was someone asked me a question, right? And that question yesterday was, how do you deal with losses? And I was thinking to myself, not only in my trading, but in my personal life, to really simplify things, right? Keep it simple, or keep it super simple, right? It's not only in my trading, but it's also in my day-to-day. I found out the more people I hang around who are, relatively successful, maybe CEOs, business owners, retired, they're all looking for things to really simplify their lives. And some of those aspects that I started implementing in myself is eliminating decisions throughout my day-to-day. And I've noticed that I've been door dashing. I've stopped trying to have the big decision. What should I eat? Do I make my food? Do I have to do the dishes? Do I do laundry? And I've really tried to start, I want to say, delegating it, right? Where I just pay for DoorDash. I don't have dishes afterwards. And really trying to delegate a lot of my decisions in my day-to-day life. And I've realized that applies a lot to my trading. Is the less decisions that I have when I'm trading, the easier it is for me. And that really goes down the line of KISS, right? Keep it super simple. And so when I start on a daily chart, you can see my charts are very plain. There's nothing on it. You don't see any indicators. They're what we call a naked chart. And you will see me add, trend lines and support and resistance on this chart, but then immediately delete it. I don't, it's just a pet peeve of mine. I just like it very clean, very simple. You guys could see here on the channel, it's very clean and it looks good, right? So here on the daily chart, we only had one new candlestick, and it's a very small ranged day that we had yesterday. Whether it's we're waiting on news, nothing's really happening in the market. There's indecision in the market. Whatever the scenario is, we didn't really go anywhere. And we had that huge rally on NVIDIA earnings. And ever since then, we've just been going sideways. So this is a tough market to trade. It really is, because as a trader, we love volatility, because how do you make money if there's no volatility, right? Because we need that price action to move. Even as a slow markets trader, where, yes, I do trade at this time. This is the time frame that we all know that I trade my slow markets class 8 p.m. Central Time till, for me, this class ends at 9 p.m. Central, but I will go until about 10 p.m. and usually I'll have my dinner, Netflix, relax, and then maybe I'll check the markets one more time before going to sleep. And then you could see the market hasn't moved since I've been talking, right? We're at 18,008, 18,007. Very, very slow for this type of trading. And since I'm on a daily chart, we only get one candlestick a day. And the way that I'm looking at this market right now is that we tried to break an all-time high on, Thursday, and we failed. And, pretty much since then, we've just been kind of consolidating, hanging out. We have had, a lower high, and then we kind of had that again, right? We barely made a new all-time high, and then we failed to go anywhere since. And we've kind of just been hanging around this key psychological $18,000 level. And, we'd dip below it, we'll go up above it, and we've just been bouncing around there. And if you guys were watching Topstep TV, my trades were to, either buy the dip and look for a move back towards 18,000, or when we start to rally above, sell that rip higher and look for a move back down towards 18,000. So that's really been my strategy until we get a really good definitive move in one direction or the other, whether it's some news event or whatever it is. I am needing, I don't want to say need, maybe that's not the right word. Maybe I am wanting more volatility. Like you can imagine back at middle of January when we had 4 pretty much identical days back here, and that would be a measure. That was rough trading as well, right? 1, 2, 3, 4 days where we started and we ended this pretty much at the exact same price, right? And we sold off, then we started the rally. We've had a lot of volatility. This was a lot more of a volatile consolidation. Continued to have this volatility, and now we're starting to see a little bit less, right? So the next thing I want to do is think, where are we at and what can we expect? So I'm still bullish because we're in a bullish trending market, right? Ever since October, we've been going up and to the right. So my overall bias towards the Nasdaq is going to be bullish. And so I want to make sure that when I'm placing trades, maybe the majority of the trades that I do take should be in the direction of the overall trend. The next thing I want to do is drop down to a 60-minute chart. As you can see, there's the ugly drawings on the chart. And if we look, this is a 60-minute chart now, and the 3 days of consolidation has been just this, right? Here's the big rally from NVIDIA. And then ever since then, we have been consolidating pretty much equal lows, pretty close, and then slowly making lower highs. And so maybe you could look at this as a bullish flag, right? Where the trend is up and to the right. We had this big rally. And now we're starting to consolidate and slowly condense, squeeze, contract, whatever you want to call it. We're getting in a tighter range, right? The range is slowly decreasing. And when that happens, it's very much like a rubber band, where if we do break in one direction or the other, maybe we get a lot more volatility more often than not, just like a rubber band. We're compressed and then we could snap higher or snap lower. But according to the market trend and typically the way the Nasdaq has been going, I'm going to favor to the upside, right? Where if we do start to break out, maybe have this trend line that has been, relatively honored, right? Where we're continuing to make lower highs. Whereas if we do start to break out to the upside, then we would have a greater probability that we can have a big continuation and possibly make a new all-time high. So that's what I'm going to look for. It's how do we take advantage of that, right? So one, you could get into a trade, as we start to break out, or two, you can get into a trade if we do pull back down to the bottom of this range. I don't want to say I would prefer, but for me, in terms of risk reward, I would like another push back down, maybe to see something lower. We do have some areas, maybe here or around 900, that I would like us to see in order to get into some long positions, maybe. I'm not sure. It's very hard to judge. We're in an area where I don't want to be long. I don't want to be short. We're right at that $18,000 level, and it's very hard for me, at least, to manage risk. So let's zoom in and let's talk about some of the ways that maybe we could take advantage of it if we do start to see some type of movement. And yeah, this is a 1 hour chart. So let's drop down to a 5-minute chart. So here we go. Here's a 5-minute chart. And Now we could start to see it a little bit better, right? With more accuracy, and it's starting to become more granular. So I could be maybe a little bit more accurate of how this is looking. So maybe something like this. Like this is a possibility. Nothing's perfect, right? Because everything's a zone. And so we did have a sell-off. When was this? I'll continue to zoom in and make it look a bit better. So here's the past 2 days, right? We had consolidation, a sell-off down towards the lower 900s, then a rally back up above 18,000, and then a sell-off back down, and then a rally back up. And now we're kind of hovering right here. And so if you're a bearish trader and you believe the market could go down, then of course, the way to take advantage of a move overnight would be to either get in using a limit order if we do have a push up higher, maybe get in at a good risk reward where we could get in closer to resistance and we can have a decently tight stop loss. And then you could have some take profits, much lower, getting into a really good risk reward trade. So this might be a decent short opportunity. I'm really hesitant. I don't think I would be taking a short in this type of a market. However, the risk reward where if we do get short up here in this zone, and then we're looking for a push all the way down here, you guys could see the risk reward would be really good and very favorable for this type of entry. It's something I like from a risk reward perspective, but I don't like from the overall trend. Maybe something that's a little more, I guess, I would be more confident in would be something like this, to where this would be a sell stop order, right? I don't know if it would be here off this pivot or maybe up a little bit higher. This one has more probable, right? Because these are all examples. I'm not suggesting take this order, but this would be a sell stop. This is a decent 1-to-1 risk reward. And all this is saying is if we do sell off and we break below this, I will then get triggered into a short. And then my take profit would be activated and my stop loss would be up here. So that's maybe an way or an idea that we could take advantage of a move if we do start to sell off between now and tomorrow. I don't think I like it from my personal perspective, but if you are short, that is probably a decent way to take advantage of it with either a good 1-to-1 risk reward where it has a higher probability of being profitable versus, maybe it would be a good 4, maybe 5-to-1 risk reward, but the probabilities are less likely because the market will be going against you, right? But the way that I'm looking at the Nasdaq tonight is I'm a bull, and I definitely want to hold on one second. So there we go. There we go. My mother's in the chat. So I had to delete her message. So there's your warning. If she messages again, I'm banning you. Anyway, it's all for fun and games. So I'm bullish on the market. So what I would actually look for in my personal account is if we do start to rally up and break out. All right. It looks like you guys are focused on the whole mom thing now. I should have never said anything, right? You guys would have never known. But well, now I'm distracted. You threw me off my game. Anyway, as I was saying before I was distracted or interrupted, I am bullish the overall market, right, for the Nasdaq. So what I'm looking for is a push up. Man, how am I going to finish this class now with that? So that's going to be on. I better be watching my phone. Here we go. All right. I need to refocus now. This is turning into one heck of a class. So if I'm going to get into a long and I'm looking to take advantage of a move between now and tomorrow and think that we could break out and take advantage of that, it'd be pretty much doing the same thing, right? Maybe I'm looking to get in using a limit order, and that would be, say, a buy limit. So let's just do this example.
Order submitted.
If the market does sell off, then I would be looking to get into a buy limit down in this zone. And then looking for to be honest, I would dare to say maybe around here. Then I would definitely make sure I have a decent stop loss here.
Order submitted.
And then a take profit if we do turn around and rally back up into this higher area, maybe 18,000, right? So what this would be saying is the market would need to sell off. It would trigger me into the long, and then I would get some type of a bounce. This is a little bit harder because you'll be buying the market as it goes down, right? And it's a lot less likely to happen because the market's going against you. So I'm a little bit less inclined to take this one. I would much rather have the market come down, then see some type of reversal pattern, and then take a long. So maybe it's not going to happen tonight. If I am open or awake during the New York session, or maybe even tomorrow, I would look for something like this. However,
order
canceled. Maybe what's a lot more enticing to me is using a buy stop, right? Is if the market does decide to rally between now and tomorrow and break up towards new all-time highs, maybe I just use a buy stop, right? Where we would use something like, let's see, where is it?
Order submitted.
I don't know if we want it here. Maybe we have it a little bit lower. I'm in a risk of being, stop hunted. But what this is saying is if between now and tomorrow, the rally, like if it rallies up, it does trigger me into a long. And then I'm looking for a push higher. For something like this, I would be okay with putting a stop loss below the previous pivot point, and then looking for targets, up a bit higher. So maybe here for a first target.
Order submitted.
Actually, maybe even getting into two, dropping down to micros and not minis. So maybe I put in for example, 5 micros, right? Where I'm, instead of $20 per point, I'm only risking $2 per point for each micro.
Order submitted.
So what this would be saying is I'm now only risking $10 per point.
Order submitted.
If these were micros. And then this will allow me to scale in and scale out.
Order submitted.
I put a take profit of 4 micros here, and then I let one run. And what this means is if the market does rally and it triggers me into a long, if it breaks out of this down trend line, this down pressure, and I get triggered into a long, I'd be triggered into 5 micros. Let's just say this is micros, right? And then, yeah, I hope that makes sense. Did you guys hear the order submitted? Did you guys hear that? I want to make sure, because if so, I'm just gonna turn it off. Actually, there we go. Now you won't hear it. Yeah, that'd give me PTSD, Aaron. I have it muted for me, so I can't hear it. But yes. Okay, there we go. Let's test it out. Let's see. That would trigger me out of a position, right? Not 100% of my position. It'll trigger me out of 4 of the contracts. And then I could leave one on for either a higher take profit, or I just leave it on as a runner, because if that's the case, and maybe based off those higher time frame, my higher time frame analysis, that if we do start to break out and we do make a run to the all-time highs, and we start making all-time highs, then definitely I would love to have a runner on. And so what this is saying, between now and tomorrow, the market could do whatever it wants. So if the market does sell off, I won't be triggered in because this is an OCO. This is a one cancels other order, right? The market could sell off. It could bounce around. Sometimes these orders, for me, they might not even get triggered in until the New York session. There are times where I'll wake up around, say, 10 a.m. Central Standard Time, and it's just triggered me into a long. Market could do whatever it wants, right? So that's one way to take advantage of a move between now and tomorrow. Maybe there's some big news event that happens, overseas, around the world. Who knows, right? Anything can happen in the market. However, this would put myself into an advantage of, if we do see a big rally, then it will trigger me into a long. So I think that's enough of that. Let me make sure. I'm going to close out of this. And we're going to move on to a new market, guys. I haven't talked about this one. Nikkei, NKD is this ticker symbol. And I haven't talked about it too much. Let me go ahead and do a higher time frame on this. This is the Japanese market. I talked about it briefly. We haven't traded it here for a while. I think I touched base on it briefly yesterday, but very similar to the Nasdaq is we've been in a trending market for a while. You can see we've been very bullish going up and to the right. And then every time we have a consolidation or pullback, guess what? It's just been a bullish flag, right? Where you could see bullish flag, maybe something similar we're seeing in the Nasdaq, and then a rally up and to the right. So let me zoom in now. This is an hourly chart on the Nikkei. And so maybe what we're looking at, and possibly what I'm looking for, is something similar. Like, is this going to be something similar? So you guys remember, I think it was yesterday, correct me if I'm wrong. Sometimes my days just mix, but Nikkei was selling off. I'm like, I need to be patient. I'm going to wait for something, and I would much rather get into the long side. So very, very similar to the Nasdaq is, if we do start to break out, then I would be looking for a continuation trade. So let me go ahead and clear off the charts, and then we could start to zoom in. So I zoom in. I don't want to say a 5-minute chart. Let's just say this is zooming in. And now we're going to start to focus and break down a lot more. So this is what we were looking at that higher time frame. So once again, pretty much the same thing. Copy and paste the same analysis that I did on Nasdaq, but for the Nikkei. One way to do it is using exactly that, a buy stop, saying if we do start to break out, because we are technically making lower highs, then it will trigger me into a long. I could have a stop loss somewhere down here and look for a continuation. That is an option. However, there's no micros on Nikkei, so I want to be a little bit more accurate. Actually, let me go ahead. I might be getting into a long right now. This is my live account, just so you guys know. I think you could see it. Where is it at? Yeah, you can see my account information. It's up above. But this is my live account, and I'm actually might try and get into a long right now. So let me talk through this trade first to see if it will fill me. The Nikkei has a very thin order book. And so sometimes it might take a bit to get filled. But here's why I'm looking to get into a long. So you can see we are in this channel. We know that I'm bullish, right? So what has been a decent strategy? Number one, I want to be going with the trend, okay? Number two, I definitely want to be getting in around support or resistance. So, I'm going with the trend. I am around support in this particular instance, and we might be having a double bottom. So, man, this thing might not fill me. So we kind of had a double bottom here, right? We also had a double bottom on here, and now we're possibly having a double bottom again on here as I'm talking. So let me show you what it looks like on a 5-minute chart. It's really ugly on a 5-minute chart because there's gaps, because there's a lower, because the order book is really thin, right? Crap, and I think I just missed that. That's okay. We'll see. We'll see. I'm just going to actually take that off. We'll see if we can get a push down. But you kind of see how that, right? Does that make sense to you guys? Where we are down at the bottom of this range because we are in a range-bound market down and to the right. Maybe we are looking at this as a bull flag. If you guys remember what we were talking about just a moment ago on a different time frame, right? Very similar to this. So if we are looking at this, then these have been really good buying opportunities whenever we come down to the bottom of this trend line. Oh gosh, Danielle. Now you know my mom's name, huh? Anyway, it's the same situation here in the Nikkei. So whenever we do have a sell-off, this has been good buying opportunities. So I think I might have missed this. We will see. I don't want to rush into a trade. I don't want to get FOMO, right? Because I want to make sure I get into a good risk reward. Maybe we have some type of a pullback down here, and then I could look to get into a better risk reward, because it's 100% about risk, to where we're looking at risk. This is going to be a rough one. How do I'm struggling. I'm getting through this class. So anyway, you can see how we've been making double bottoms, and every single time we do, this has been a decent opportunity to get into a long. And this long, these are like longer term longs, as in it's not a quick scalp. So I'm not in and out really, really quick. It's definitely something that I could hold over, between now and or tomorrow, right? So if I am looking to get into a long position here, we want to look at risk. Risk is the number one thing that we have to be looking for. So let's say I am able to get into a long. We're just going to do some basic math here. A decent stop loss that I would be comfortable with in my own is going to be below the low, right? So let's say 70 is where I would be having my stop loss. 70 would say where I'd be getting in. So I would be risking 20 ticks, and then it's $25 per tick here on, let's see. Just doing some math, 25 times 20 is what, $500. I typically only like to risk between $300 and $400 on this. So this might not be a good setup for me now that I'm looking at it. I would need to risk less, which would mean looking for the market to come possibly down even further for me to get into a long. Then I would only be risking maybe half, not even half. Let's say that'd be closer to $400. Yeah, that's about $400 for me. So I would need something like this, because I would be looking for a target, because I definitely wouldn't be looking for the market to break out right now. I would maybe be looking for something like this as a target. So I would be trying to get a 2-to-1, maybe a comfortable with a 1-to-1 risk reward on something like this. Crindle, I'm not sure what you're referring to. You used range or ticks on Nikkei. Texas made, I do use the 100 tick on Nikkei. Right now you're looking at the 5-minute chart. Let's get to some questions right now. I'm just looking at, let's see what questions. Danielle's been great. She's the one that sends me questions. Dakota, what about liquidity wick? Business beyond. What do you mean by liquidity wick? If you could explain that. Maybe you're referring to something like this. Is that what you're referring to? A liquidity wick where it just like stop loss hunt? So maybe explain that question a little bit better. The next one, do you start risk with stop or take profit, or do you do both separately? I'm always curious how people develop with their risk management on a trade by trade basis. I think Andy, I think I explained that. I do start with my risk first on, like you said, this is how I really trade, right? This is the Nikkei. This is the setup that I'm looking for on the Nikkei, David. And every single night here at Slow Markets, I am going to be going over 100% exactly how I trade. Like, this is how I trade. This is my thought process in my personal accounts. This is my thought process when I'm trading my Topstep accounts. This is my live, right? You guys can see I'm trading my live account. I trade it the same way I trade my Express funded accounts. I trade it the same way I trade my combined accounts. I practice the way we do want to perform in a live account. There's no sense on what do they call it? Practice how you play. We want to make sure that the way that I am showing you guys is the exact same way I do it in my live accounts. So every single night in Slow Markets, and maybe this could be a good advertisement for Slow Markets, is that I'm going to be talking out any trades I see the way that I think of it through my own thought process, right? I hope that explains it, Geoff, however you want to say that name is. We don't want to trade any differently. That just creates bad habits unless you are working on a different strategy. And when you are working on a different strategy, then I would recommend, of course, you're going to be trading differently in a combine versus a live. Geoff, Geoff. I think you did pronounce as Jeff. Doesn't matter. Geoff. Jeff. Yes. Sarah has my back. So yeah, every single thing that you see me do in Slow Markets is actually how I do it in my live accounts. That's how I got from starting these accounts at the beginning of January, how I've made it up to 86,000, number one on the leaderboard. And it's also how I've lost some of that, and you guys seen everything about it, right? You guys know that I lose most of my trades. I'm looking for good 4-to-1 risk rewards, and that's just part of trading. And it's been nice for me because I get to actually, what I love is I have been able to just talk out loud what's going in my head. So some of it I'm just talking out loud, and sometimes I do forget that I have a class. And the funny thing is, sometimes when I'm not in class, and sometimes when I'm not in front of the camera, I might catch myself thinking out loud, I guess is the way to say it. And I would be trading just by myself, and I'm just like, wait, this is weird. Nobody's listening to me, and I'm over here thinking out loud. But it's helped me in my trading in terms of just thinking through this thought process, and hopefully it helps you guys. That's why I started to be a coach, is to help you guys as traders, guys and girls, right? And hopefully give you guys a more inside look of my own trading and my own thought process. So yeah, there you go. There's a little bit of fun in terms of why I do believe slow markets is going to be helpful for traders. And like I said, there's a balance between entertainment and actual trading. I will always try and be entertaining. Like I see there's 740 people watching. Last night we had almost 1,000. So if there's ways that you believe we can improve this segment of slow markets on, bringing more eyes, having a bigger audience, I'm all for that. So let's dive into crude oil. And yeah, crude oil was fun. Everyone who was here yesterday, you guys know I've actually been in, like, crude oil's been amazing for me. So let's load it up. Same exact thing. Okay. Let's go ahead and look at the 60-minute. And actually the daily on crude oil. So yeah, guys, even if you don't trade like this, hopefully it gives some type of insights, because you don't have to be a great trader. You don't have to. Oh my gosh, we're actually breaking out. All right, guys, let's. Sorry, I'm a trader first. Oh, this is my live account. I don't have the data for crude oil in my live. I'm over here on. You can see I have it on my phone. Let's see. Can you guys see it at all? Yeah, there's my phone. There's crude oil on my phone. So we could go through this analysis on crude oil. Here's the daily chart for crude, and to me, this is what I've been looking at, and I think we might be getting it. You guys remember what I was looking at yesterday, where very simple, right? Here's a very basic pattern on a daily chart where, what do we call this? A wedge. If we do start to break up, we might see a nice move and a nice run up, right? This is what I've been looking for. I've been wanting to take advantage of a break higher. Yesterday was another great example. If you were here yesterday, you guys know what I'm talking about, because this is what I'm looking for. So if we zoom in to a 60-minute chart, let me go ahead and zoom in. So here is the 60-minute chart, right? And you can see this trend line. You could see it. Let me zoom out a little bit so you could see it better. And we've been making lower highs, and we've been making equal, if not higher. We've been making higher lows, and we've been making equal, if not higher highs. And it's the same mentality. I'm looking to be taking advantage of a move, seeing if we could break, $79 a barrel and look for a move above $80 a barrel. So now last night, if you guys could remember, this is where we were at, right? And if you also could remember is, how could we have taken advantage of it? And there's two ways that we could have taken advantage of yesterday during crude oil. Way number one was, everybody knows, we use a buy stop, saying if we do rally up, we break out, and we look for take profits up here, right? That was the first way. The second way was a buy limit, depending on where you want the buy limit for. The first areas I think we were looking at was maybe this. The second one was even further down. So somewhere around here, looking for a buy limit, and then having some take profits up here. We do know this one was less probable than using a buy stop. However, we do get a better risk reward using a limit like this, even though the probabilities are less likely. I mean, I didn't place this trade. I really wish I would have, because sure enough, the buy stop, there's the probabilities, and those probabilities worked out. So I hope this is just a really great example of probabilities, right? If you used a buy limit, you could see it's a lot harder to pinpoint. Maybe I don't even get triggered in. The buy limit would have been amazing if you happen to get in at a good location. And the buy stop, this was the buy stop trade. You get triggered in at, 78.09, somewhere up here. And we start to zoom in a lot better. And this is on the hourly chart. So if we were using a buy stop, meaning if the market does rally up, it triggers me into a long, and then I look for take profits up to the next high. And then I can have my stop loss, down here. Then, the market's going. It wouldn't trigger you in because it's an OCO order. However, it would have triggered you in up here. And sure enough, right, there is a beautiful example of, and when did it wouldn't have triggered you into the New York session. So the New York session would have triggered you in, but we set this trade up, the night before, and then you just sleep through all this. Maybe you go to work, whatever your situation is. However, this is the example of how it works. Even though there's no guarantee of you being filled. So yeah, Crindle says it looks like a Fibonacci retracement. So yeah, that could very well be it. Maybe you use Fibonacci's and you put a Fibonacci level in. Well, let's see. Is there a Fibonacci? Let's say maybe you do a Fibonacci from here to here, and you tell yourself, oh, and maybe this is just an example. Okay, this is an example. I've seen traders do this, Crindle, where this is where we were at last night, and you put a Fibonacci on, and you say, oh, okay, well, maybe this is a good place for a buy limit. And then I put my stop loss here. And then I'm looking for a take profit somewhere up here, right? And then you say, if this happens between now and tomorrow, that will work out. Of course, that's hindsight, right? Hindsight trading. But, that's an example, right? That's a very basic, very simple example, using a limit order or using a buy stop order, because that stop, as soon as it broke through, it didn't even, you took no heat on it, as in there's no pullback, there's nothing. It was just straight up. There's a breakout, it retested, right? Very basic, simple technical analysis. When we break out, typically resistance then becomes support. And then we rallied up. Now the question we ask ourselves is, are we going to see the same thing tonight? Right? Maybe. We did break out, right? You can see from here, we officially made a new high. Do we just set the same thing up? I mean, here's the high from January 26th, right? Maybe we zoom out. And this is an hourly chart. We have some highs up here closer to $80 a barrel. So are we setting up to break out, guys? That's the question. Where are we at? How can we take advantage of any movement between now and tomorrow? It's a little bit harder to take advantage of a breakout using, I don't know, we're up. It's how can we convince ourselves, how can we buy the market at the highs, right? That's the question, is do we buy the market at the high? Maybe a buy stop makes more sense to me than trying to do a limit order, because there is now some added risk of a bigger pullback. I'm not sure. Maybe that's just me being a little hesitant. Not trying to, like you said, like Nick said, try not to convince yourself. Even though I do believe we could just break out and go to $80 a barrel, if not break above $80 a barrel. So yeah, Crindle. So maybe a buy stop would make more sense to me, because we did have a pullback. Actually, this pullback happened after the close, right here. We did get a pullback all the way down to, looks like 31 cents. Yeah, 78.31, and then we've been, pushing higher ever since. Maybe we get something similar, right? Maybe we do have a pullback and then a push higher. So there is a scenario where the market does come down and then rally. So maybe something like this could be an option. That would be using a limit order, saying that, if we do start to sell off, maybe we get in using a buy limit, very much like last night. And it looks like 79, maybe $78 a barrel, something around there, like that. 78.05. Well, let's just say 78.05. Then I could use a stop loss. I like to risk $300 to $400. I don't see too great location for a stop loss. This one's a little bit harder to do a stop loss. This would be about $200 for a stop loss here. And then, of course, maybe I get into 2 contracts. This will allow me to risk $400. And then it will also allow me to get out of one for 1 take profit here, and then maybe hold on to the second contract to see if we rally. So let's zoom into a 5-minute, and then we could granulize it and maybe get a little bit more accurate with these entries. And I do like the entry of the bottom of here. But why would I have my stop loss there is the question. It is below these highs, and it's below this. So that is actually not too bad of a stop loss for me. So maybe something like this. This is an option. This is something that I'm actually looking at and thinking of. So this is option number 1 for me. Then the second option, which is, let me see. I was going to get in right here. So if we're talking about risk reward, right? So look at the risk reward on this. I'm risking, we're going to do 80. So I'm risking 25 cents, okay, to make, if we do an even number on this, so risking 25 to make 85. So 25 to 85. That is almost a 5 to, what is it? A 5 to 1 risk reward, as well as leaving a runner on, because this runner could, it could continue to, maybe it does, if it does go up to $80 a barrel, then this, 5 to 1 risk reward could become much, much greater, right? I could get an 8 to 1 risk reward on this type of a trade. Yeah, a little under 4 to 1, but then if you add the runner, it could become much greater, right? So if we do rally, and if we happen to break $80 a barrel between now and tomorrow, then yeah, this would be a really high risk reward trade, which would mean that I would be okay losing this 80% of the time. So if I place this trade and I lose it, then statistically I can lose this 80% of the time and still be profitable. That's where I lose more times than I win, is trades that set up like this, right? Because what this means is oil will need to sell off, fill me into a trade, I'll get into a long, and then turn around and rally. Pretty much like yesterday, right? We sell off, turn around and rally. Or no, this was it, right? That's not it. Yeah, this was it from yesterday, right? We sold off and we got to this resistance level, and then we rallied. And that would have been pretty much the same trade, right? That's pretty dang close to the same trade, where if we did have a buy limit down here, where say this was our buy limit around this support and resistance, which is realistic, very similar to where this is support and resistance, then yes, you would have a really good risk reward trade. However, if we're talking about probabilities, I will lose this more than 60% of the time, which is okay, right? Because yes, even though I'm going to be losing this a lot more than I'm winning, the profits and the risk reward, the expectancy is greater. It has a positive expectancy on a trade similar to this, pretty much this trade, right? Crindle, I get confused on R&R notations. I can get 8-1 when it's 8-1, but with it should be 1-8, those trading cards. Yeah, so I mean, it depends. Usually the bigger number is the profit, okay? Because on the trading dashboard here at Topstep, it's reward to risk, where the reward's 8, the risk is 1. I'm used to saying risk reward. It's just the way you look at it, right? Typically, the bigger number is the reward. So on this one, the risk is here, the reward is there. So for every $1 I'm looking to risk, I'm looking to make $4 to $5. So yeah, that's the way you look at it. At Topstep, the dashboard, it says reward to risk, which is fine. Some places you might see risk rewards, and like on some news outlet. It just depends on that as well. So this is something I'm looking at. So the other option, before we start a quick Q&A, where I see some questions that are coming in, would be a buy stop, right? And what's that? That's doing this, right? The exact same thing we're talking about. Whereas if we do start to rally and break out, then it will trigger me into a long, and then I'll start to look for some profits. And typically, I would look for maybe a 1-to-1 risk reward. That seems really high up there. So maybe something like this, where I'd look for a 1-to-1. So something like this. If we do break out, then I would be looking for a 1-to-1. And this is more probable than trying to find the reversal, right? So I hope that makes sense. I'm going to be covering this stuff, like I said, pretty much every night in slow markets, Monday through Thursday. Like I said, this is episode number 4 now, and hopefully things will continue to get better. So let's do a few Q&A before I end the class. I see some of them here in the chat that Danielle has sent me. And then if you guys want to go ahead and copy paste, here's some FOMO. Yeah, Nikkei. Yeah, that was a good Nikkei trade. I missed out on that little pullback. Oh well, spilt milk. I did miss that trade. Dang it. You're welcome, Rips. Always glad to have you on here. Probably in his pajamas, getting ready for. Rips wakes up really early in the morning. I wish I could have his schedule. It's just about this. It shows the discipline that Rips has. That's why he's on my team. So here's some of these questions. Let's see. I'm just going through some of them. I'm sure you explained this before. What's the difference between the tick and the minute graph? So a tick chart, maybe I need to have a whole class on this. A tick chart takes in, like, for example, every candlestick just represents the number of movements, every single tick. And then the time chart represents time increments. If you don't understand it, maybe Google it. Maybe come into our Topstep Discord, and I could maybe explain that a little bit better. I should have a class soon. What is the peak hours for the Nikkei? It depends. Nikkei is the Japanese market, right? So whenever the Asian markets are open, that's typically when you see a little more volatility from the Nikkei. Yeah, I think that explains it. Tomorrow at midnight, we have the Bank of Japan and CPI. Do you think we are going to take a setup on that if it presents itself? Yeah, so I don't pay too much attention to world news when it comes to these trade setups. However, those are always a good thing to be aware of. Where it's a lot better, it's like, yeah, why would I be getting into a trade 5 minutes before a Bank of Japan decision or just some type of dramatic news? So it's really always good to be aware of big news events that can move the market that you are trading. For me, it doesn't make too big of a difference. But yes, I'm always wanting to be aware of what is going on around the world in terms of big news events, right? Because if tomorrow there's a big FOMC minute, that could affect the way that I am placing my trades. I wish I could sleep in. Full port Nasdaq longs. Where would you look to exit on the Nikkei if you were in the trade? Yeah, Fernando. So I would actually be looking for maybe a 2-to-1 risk reward. And I explained it a little bit. I would definitely recommend rewatching it. This was one of the second markets I covered. But yeah, if I did get in long here, maybe look to get in out, maybe up here, and my stop loss would be down there. So maybe something like that. So that was just a quick explanation, but I'm a little short on time. Like I said, if you guys missed anything, come back tomorrow, and I will be here to continue to answer questions. Like I said, Monday through Thursday, we're getting everything together. I will have Coach Jay on with me on Thursday, so that's going to be fun. Hopefully, I got the audio issues worked out. Do I ever use moving averages? Nope. It's pure technical analysis. I found that that's more simple for me. It's easier for me from that type of perspective. I focus on my risk management a lot more than anything else, where, to be honest, there is a way that you could just flip a coin, get in long or short, and practice really good risk management and have a positive expectancy. Of course, that's an extreme example. Thank you, Sarah. The audio is great. Well, I don't think you were here yesterday, were you? Audio is great for this. Like I said, there's always the fun things. There's Jay Cook. He will be here tomorrow. So I appreciate everybody here. Look forward to talking to you guys tomorrow. We're still in the competition. We are still in the competition between, slow markets and fast markets. So I'm always looking for the like button and subscribers. So I found out I guess I could see how many of you guys have subscribed during my class. So, there's another aspect. This is where I'm getting my competitive nature from, is letting it out on slow markets versus fast markets and not in my trading. So good night, everybody. I will catch you tomorrow. If I could find to stop this recording.